sizes. The question is are you committed to making sure that these funds make it to the smallest of towns that haven't received any assistance yet, without the state skimming off any money off the top, or adding additional restrictions that weren't included in the legislation or Treasury's guidance?
Well, we're committed to following the instructions that Congress gave us, and I would agree that that was Congress's intention, where we have about 60 days to write the guidance on the use of those state and local funds. We're consulting broadly. Congress intended for there to be a lot of flexibility in how states and localities can use those funds, and we will certainly try to make sure that they're distributed as Congress intended and that the flexibility is there. Although we also want to make sure that that we have requirements to make sure the money is used responsibly in accordance with Congress's direction.
I appreciate that. When do you say you got 60 days to write up the guidance? Could you give me a ballpark figure? Will it take the full 60 days for the guidance for municipalities, or do you intend to get it out sooner?
We're working as hard as we possibly can on this. There are a host of issues about how to interpret the requirements of this statute. I don't want to promise that it will take less than 60 days, but we're going to try to get this done as soon as we possibly can.
I appreciate that, and I appreciate your hard work on this. I get questions all the time about the flexibility of how these monies can be used. By the way, the municipalities or counties in Montana are very thankful for these dollars. They've been running on shoestring budgets forever, and this is the first time they're going to be able to make some real improvements in their counties and municipalities, and plus being able to pay for police officers and fire departments and make sure the garbage gets picked up. So thank you very much. I appreciate both of you, and we look forward to visiting on down the line. Thank you, Mr. Chairman.
Thanks, Senator Tester. Senator Crapo from Idaho is recognized for 5 minutes.
Thank you, Mr. Chairman. And Secretary Yellen, I want to talk with you about another guidance issue that we need to focus on in the American Recovery Act. In the Act, there is a restriction on the use of funds under the State Fiscal Recovery Fund that was included that would prohibit states from using funds to, and this is a direct quote, either directly or indirectly offset a reduction in the net tax revenue of such state or territory resulting from a change in law, regulation, or administrative interpretation during the covered period that reduces any tax by providing a reduction in a rate, a rebate, a deduction, a credit, or otherwise, or delays the imposition of any tax or tax increase. Now, as you know very well, this has raised many questions and concerns. 11 of my Republican colleagues and I introduced the State Fiscal Flexibility Act last week to simply remove this troubling restriction from the law. 21 state attorneys general wrote you asking for a clarification on this issue, and a lawsuit was filed by the Ohio Attorney General. This is an issue that needs immediate clarity. And I'm aware of the letter that you responded to the attorneys general with, in which you said that you will provide guidance before the states must submit a certification under 602D1. But that doesn't really tell us how soon this guidance is going to come out. It seems to me that states are hamstrung right now. They can't do anything until you give them the guidance. Can you give us some clarity on how soon this guidance will come out?
Well, we have a 60-day period to complete the work to get the money to distribute to the state and local governments. And there are a host of thorny questions that we have to work through that connect with the issue that you just mentioned. And we simply are going to have to try to craft guidance in that period of time. We're working on it 24/7 to get it out as rapidly as we possibly can.
Well, thank you, and I appreciate that. I'm going to encourage you to do everything you can in developing this guidance to answer those thorny questions in a way that gives maximum flexibility to the states and local communities. Again, in the letter you wrote to the attorneys general, you seemed to be moving in that direction. You stated that nothing in the act prevents the states from enacting a broad variety of tax cuts. It just cannot use the revenue from the act as an offset for those tax cuts.
That's correct.
And I really appreciate that perspective. As I'm sure you're aware, that still leaves the question as to what is offsetting. How do you intend to approach the question of what is directly or indirectly offsetting a tax cut?
Well, when I said that we have thorny questions to work through, you've just indicated why we do. We will have to define what it means to use money from this act as an offset for tax cuts. And given the fungibility of money, it's a hard question to answer, but that's what we're required to do, and we will do our best to offer guidance on it.
Well, you just hit the nail on the head when you referenced the fungibility of money. And so I want to encourage you to be very restrictive in terms of the application of this prohibition and give the maximum flexibility to states and local communities as they administer these funds. I just want to ask you an example question. I want to keep pushing on this issue with you.
All right.
And I realize you may not be able to answer this any more specifically than you've been able to give specifics so far, but I'm just going to give a hypothetical. What if a state decides that, as with the federal act's waiver of federal taxation on a certain amount of unemployment compensation, the state would like to also waive a portion of its tax on those same unemployment compensation dollars? Would that be a penalty that the state would have to pay for if it did that?
So we've been asked this question by a number of states, and it's one we're going to have to consider and work through whether conforming changes that states make, for example, with respect to unemployment insurance, whether or not that would qualify as a tax cut or be exempt, and we're examining that question carefully.
Well, thank you. Again, I'm just going to encourage you again to give the states the maximum flexibility they can. They are hamstrung. And the last thing we should do is put states in a predicament where they could lose the funding that was authorized by Congress to help them just because they want to manage their fiscal policy in a way that might include some reduction of tax revenue. Thank you. Thank you.
Thank you, Senator Crapo. Senator Menendez from New Jersey is recognized for 5 minutes.
Well, thank you, Mr. Chairman. The Paycheck Protection Program has delivered over $718 billion in critical relief to small businesses. It's set to expire exactly 1 week from today. Secretary Yellen and Chairman Powell, is the economy at a place where Congress can safely end PPP relief to small businesses?
So, of course, the economy is not at a place where small businesses that have been affected are able to thrive. I'm not sure how much money remains in the program, but there is some, and I would be supportive of an extension.
Chairman Powell?
I would defer to the secretary on that question. Thanks.
Well, in February, 3 out of every 10 small businesses said they would likely not survive 2021 without additional government assistance. Now, fortunately, the American Rescue Plan included $7.2 billion for PPP loans and second draw PPP loans. But if Congress doesn't reauthorize the program in the next 7 days, that money will never reach struggling small businesses. So I think it would be reckless and cruel to let the program expire when there are still about $50 billion of desperately needed PPP funding remaining and businesses waiting for relief. So I'm glad to hear that you agree that it should be extended. The Center on Budget and Policy Priorities estimates that as of March 1st, there were 13.5 million adults behind on rent and an additional 10.3 million adults behind on their
to ask you a question about long-term unemployment. I was heartened by your testimony this morning that you hope and anticipate that because of the passage of the American Rescue Plan and other measures that have been taken, that we may get back to full employment by the summer of next year. I remain very concerned about the long-term unemployed. Even before the pandemic hit, we had more than 1 million Americans who were long-term unemployed, meaning they were looking for work for more than 6 months and couldn't find anything. That number is currently 4 million. I do expect that with the natural improvement of the economy, that number will come down. But I also think that if we don't take deliberate measures to help bring the long-term unemployed back into the economy, that we're going to be leaving them behind. I did have a conversation with Chairman Powell about this at our last hearing. He agreed that deliberate, targeted measures were necessary beyond just the natural lift in the economy that we hope we'll see as a result of measures taken. Do you agree with that assessment?
Well, I am worried about the long-term unemployed and think we should be focusing importantly on what we need to do to make sure that they're not permanently scarred. Yes.
And would you agree, though, that beyond measures we take to, fiscal policies and other policies that we take to improve the economy, that in order to address the needs of the long-term unemployed, we're going to have to be more deliberate and have policies targeted to accomplish that?
We may very well. And I'm not sure, Senator, exactly what you have in mind, but policies that focus on training, workforce development may be appropriate as the economy recovers.
Right. I appreciate that. Well, Senator Wyden and Senator Baldwin and I have proposed different forms of long-term unemployment elimination bills. They do include a workforce training component, but they also include some level of subsidized employment for 1 or 2 years combined with those wraparound services in order to make sure that we address this chronic problem. As you've said before, the longer somebody's out of work, the harder it becomes for them to find work. And when they do get it, they may be stuck with lower wages for the rest of their working life. So we hope to deal with this in the next piece of legislation on infrastructure improvement and other challenges. Let me ask you about the IRS because we've seen chronic underfunding of the IRS since really 2011. And as a result, it's hard for Americans to get their phone calls returned. It's harder for the IRS to process things like payment. Right now, a lot of people are still waiting for their refunds from last year's tax season. In addition to that, the estimate is that as a result of the lack of enforcement ability, about $570 billion in taxes that were owed last year did not get paid. 70% of that coming from the top 1% of Americans. So for all of these reasons, you agree that we need to better resource the IRS, both to improve customer service and to make sure that tax cheats don't get away with not paying their fair share.
I absolutely agree. The tax gap is huge, and I think we'd have a fairer tax system and collect more tax revenue without the need to raise rates if we resource the IRS properly to be able to address this issue.
I look forward to working with you on that. We were able to provide $1 billion as part of the American Rescue Plan, but
yes,
more is needed. And with my other hat, I chair the subcommittee on financial services and general government appropriations, and we're going to be asking for your help as we look at this issue. Thank you, Mr. Chairman.
Look forward to working with you on it.
Thank you, Senator Van Hollen. Senator Kennedy is recognized from Louisiana for 5 minutes.
Can you hear me okay?
Yep.
Chairman Powell, I want to start unusually for me with a statement as opposed to a question. I have been very supportive of you and the Federal Reserve and its independence. That was my position with the Trump administration. It will be my position for what it's worth with the Biden administration. And in fact, I have said both publicly and privately, Mr. Chairman, that the single most important thing that was done to save the world economy, not the American economy alone, the world economy from melting down at the during the shutdown last March, was your decision to implement a foreign currency swap line when the whole world was not looking for treasuries, they were looking for dollars. There's an effort going on worldwide to blur the line between government and politics on the one hand and central banks and their independence on the other. I see every day central banks getting more and more involved in fiscal policy and lobbying legislators with respect to the adoption of fiscal policy. I've noticed that the Bank of England has announced in its QE program that it is going to stop purchasing corporate bonds from companies that it thinks has too big of a carbon footprint. I've noticed recently that the Reserve Bank of New Zealand has decided it's going to start in its policy making, its monetary policy, taking account of housing prices. Now, this is where I'm headed, Mr. Chairman. The Federal Reserve needs to maintain its independence in America. Your credibility depends on political independence. I give you Turkey if you don't believe me. And besides that, the Federal Reserve and the good people in it are unelected. They don't have democratic accountability. And my concluding point, and I'm just going to ask you to respond briefly. Some people are going to beat on you, Mr. Chairman, like you stole Christmas to get involved in social policy in the guise of economic policy. And for the long-term health of the Federal Reserve, you need to resist that.
Thank you, Senator. So I do think Fed independence, and thank you for your strong support on that. I do think that Fed independence is an institutional arrangement that has served the public well over time. And I am strongly committed to continuing it. I also would agree that getting off of our home base and straying from our mandate is something that will put independence at risk over the long term, because we have this precious independence because we have a limited mandate and we stick to it. If we're going to be playing on every issue, then the case for our independence weakens. We should have as little. There should be very few examples of independent agencies that aren't part of the administration.
And you're one of them, Mr. Chairman. And I apologize for cutting you off, but I want to stay within my time, and I need to ask Secretary Yellen a question. Secretary Yellen, the Biden administration's plan, and it is your plan, to require the IMF to issue $1 trillion of these SDRs, new SDRs, is going to cost the American taxpayer about $180 billion. Now, your reason for doing that is a good reason. You say you want to help poor countries. But you and I both know that only about 10% of that money is going to go to poor countries. It's not going to help poor countries. It's going to help if they cash in their SDRs. It's going to help China. It's going to help Russia. It's going to help Venezuela. And besides that, under your plan, you're intentionally splitting the plan into two tranches of $500 billion each to avoid having to come before Congress. And I don't understand why it is efficient to charge the American taxpayer $180 billion, all of which we have to borrow, and you say you're doing it to help poor countries, and only 10% is going to poor countries, and even more is going to Russia and to China.
I'm sorry, it's not going to cost the taxpayer $180 billion.
Sure it is. You have to borrow the money. You don't have the money sitting in a checking account.
The IMF.
They're going to redeem those SDRs, not just the poor countries, but China.
There are many countries that can provide hard currencies in return for SDRs, including the United States. If the United States does agree to provide SDRs, it will have to issue treasury bills or debt to do it, but it will also.
I rest my case.
I'm sorry, but it will also earn interest on any amounts that it converts on behalf of other countries, and it will be essentially a wash.
But the money will never be paid
back. And it will pay. There is no money to be paid back.
Sure.
It doesn't matter. The interest that we earn on any excess SDR holdings offsets the cost of issuing treasuries, and it's essentially a wash, and it is not costly.
I disagree with you, Madam Secretary. I think I'm no disrespect, but I think you're wrong. I think we're going to have to borrow all $180 billion of this.
I don't know where you got a number like that from.
Well, when China comes to redeem its SDRs and says we want dollars, where do you think we're going to get the money? We're going to borrow it. I've gone over. I'm sorry, Mr. Chairman, but this is an important issue. I'll call you, Madam Secretary.
Okay, I'd be glad to talk about it offline.
Thank you. Thank you for your time.
Thank you, Senator Kennedy. Senator Cortez Masto from Nevada is recognized for 5 minutes.
Thank you. Secretary Yellen, Chairman Powell, welcome back to the committee. Let me start by expressing my appreciation to the staffs at your agency who are charged with implementing the laws that we have passed. I know that the staff at the Internal Revenue Service, Treasury Department, and the Federal Reserve have worked long hours to implement these laws. So let me just say, on behalf of Nevada, on behalf of the American people, I so appreciate the work that your staff have done to deliver financial assistance to Americans. So thank you for that. Let me start, Chairman Powell, with you. This conversation we always have around our hospitality and tourism industry, as you know, that's been so hard hit. Can you talk to me about what you're seeing with respect to those economies and the recovery? I think you've said that about 2/3 of the tourism and hospitality jobs lost in March 2020 are back. So can you talk a little bit more what you're seeing as a result of the relief that we have passed here in Congress and the impact it is now having on hospitality and tourism?
Sure, I'd be glad to. So actually, it's just 2/3 of the jobs that were lost during the winter COVID spike came back. The hospitality industry is still down. Travel and hospitality is still down several million jobs, and I'm sure you're seeing that at home. We're beginning to see airline travel. We're beginning to see people going to restaurants and hotels, and all of those things are just beginning to pick up. And all of that, of course, is motivated by declining COVID cases and increasing vaccinations. And, if we can just stick to social distancing and mask wearing, if I can put that commercial in again, it'll enable us really to get this done and get the economy reopened. And all of these small businesses that are hurting so much can get the relief that they need. And it's right there to be done if we can follow through on this in coming months.
I'm curious, do you see any regional variations in jobs returning in this industry?
It's very much unemployment generally is very much concentrated in these states like yours and others that have high tourism and travel and entertainment components. Those are the ones that are suffering. I don't know. As between individual states within that group, I don't know about. I couldn't say much sitting here today about how much variation there is.
No, thank you. And thank you for your work and always speaking up and out about the need to address the concerns that we see with the hospitality and travel industry that's been so hard hit because of this pandemic. Secretary Yellen, as part of the American Rescue Plan, we also included $10 billion in assistance for homeowners. And so can I ask, what is your timeline for getting frequently asked questions and guidelines out to communities wanting to help homeowners. We talk a lot about rental assistance, but there's still a lot of homeowners in need and help. And that's why we included $10 billion in assistance. So Secretary, can you talk a little bit about that as well?
Well, we're committed to getting this money into the hands of homeowners at risk of foreclosure and falling behind on their payments as soon as possible. We're working hard on it. We're conducting outreach to state housing agencies to understand their needs and to make sure these funds are quickly and effectively distributed to communities in need. We're working hard at it. I can't give you a definite date when we'll get the FAQs out.
Thank you. And so then the same question to you. As you know, we have also talked about this. The hospitality and leisure industry has been so hard hit. The money that we fought for, particularly in this last package, was really to focus on that industry, not only those businesses that are directly involved, but those that are indirectly involved. And I'm looking to you to help us to make sure that the guidelines get out as quickly as possible where they're needed to make sure we get this money into the communities. And I know this is a focus of yours as well, Secretary Yellen.
Yes, I think, the money that was designated by Congress for restaurants and associated industries, that's being managed by the SBA rather than Treasury, but we stand ready to work with them to be helpful.
Yes, and thank you. And I cannot stress enough the money that we fought for, the $350 billion to our states and local governments.
Sure, absolutely.
The same thing. I mean, this is literally life-saving, and that's why I think that the entire Democrats have fought for this and will continue to fight for this. It's the only reason that this is in the bill. And I just can't stress that enough because everybody is struggling, and from those states that are, whether they're Republican or Democrat states, whatever you want to call them, states are struggling, and it's in a bipartisan way. And so that's why this was so important.
That help is going to get out very rapidly. We have a maximum of 60 days to work through all of the thorny questions. We're working very hard on it, and we're going to get that money into the hands of state and local governments to use to support their communities.
Thank you. Thank you both so much for what you're doing.
Cortez Masto. Senator Kramer is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Madam Secretary and Chairman Powell for being here. First of all, I want to associate myself with the comments of Senator Kennedy, specifically about the importance of the independence, Mr. Chairman. I know you and I have talked about this in the past, and it's just really critical. And I applaud you for your discipline in that. What I wanted to talk about today a little bit is that the banking agencies, of course, are starting to roll back last year's regulatory measures that responded to pandemic stresses. And as you know, we made some provided some temporary relief. And we're hearing now that community banks are under leverage ratio stress because of the influx of deposits, which, of course, they're holding largely at very low risk in very low risk assets, and of course, somewhat because of their strong commitment to the PPP lending. So as the banks continue to work with their customers and communities, I'm just wondering what factors will you consider in deciding how to address leverage ratio pressures, and how much lead time will the banks and their customers get to adapt to these ad hoc decisions? And I can start with either one of you can start. Maybe start with you, Mr. Chairman.
Right. So on the community bank leverage ratio, that's something we'll be watching carefully, and we'll communicate it well ahead of time. And we're well aware of those stresses.
Very good. Well, thanks. Well, Secretary Yellen, then I'm going to ask you another question, and if you want to address the CBLR as well, that'd be great. But you've made, of course, addressing climate change one of the central points of your time at Treasury. It's been reported that President Biden's climate czar, John Kerry, has encouraged banks and other investment institutions to form a net zero banking alliance. He's also urged banks to provide as much support for alternative energy projects as possible, which seems to be at the expense of of more traditional energy projects, and possibly even forcing financial institutions to put political and social considerations ahead of sound business practices. And that would, of course, be a violation of their fiduciary responsibilities to their shareholders. So in light of this weak unemployment numbers, that do you think it's a good idea for private businesses to be forced by a government official or even encouraged by one to make decisions about where they should or should not put their money, jeopardizing jobs in our energy and other sectors of the economy that are, legal commerce, represent legal commerce and industries and businesses?
Well, Senator Kramer, I think the world faces a profound crisis in connection with climate, and it is appropriate for government, the private sector as well, to focus on how we can mitigate the risks, to encourage banks and financial institutions, lenders more generally, to think about the potential adverse impacts of investments that they may make, and perhaps more importantly, to understand that eventually we are committed to going to net zero emissions by 2050, and that can affect the returns that they receive on investments. I don't think that's inappropriate, but there are no requirements by government that I'm aware of to force anyone to lend for any particular project or not to lend to businesses that are involved in carbon emitting activities.
Well, there certainly are some very strong suggestions that border on pressure at the very least. And of course, a lot of these bigger banks are responding to that pressure and to market forces as well. But that said, I might just bring up a scenario in, say, a cold place like North Dakota or anywhere in the Midwest for that matter. When we get to times where there's a very like a polar vortex, as some people like to call it, we just call it winter. Or for that matter, you get a peak hot summer stretch when the baseload electricity that people used to rely on to keep their companies running, their manufacturing facilities going, or the gas that used to be the feedstock for a manufacturer becomes fuel for generating electricity. That could have a pretty negative impact on the companies, the manufacturers, the server farms, who suddenly find themselves with rolling blackouts. So I just hope that we can take a whole approach to these things and not try to pick entire categories of industries as we talk about, particularly as we talk about fair access to banking.
Well, I agree. This is a process that will unfold over time gradually, and we need to take account of those impacts.
Thank you for your consideration. Again, thanks to both of you for being here and for your service. Thank you, Mr. Chairman.
Thank you, Senator Kramer. We just call it winter. Thanks for making Tina and me laugh. I noticed she laughed and I laughed. Moran didn't get it, so he didn't laugh. But Senator Smith is recognized from Minnesota for 5 minutes.
Senator Smith definitely got the joke about that's just winter. So thank you, Senator Kramer. I appreciate it. And I think I'm going to start with Secretary Yellen. It's great to be with both of you, Chair Powell and Secretary Yellen. Thank you again, Secretary Yellen, for another display of grace under pressure as you were getting talked over a minute ago. I appreciated that very much. And speaking of which, I want to just hone in on the issue of women in the workplace. And, you and I have spoken about this, the challenges that women are facing in the workplace right now. COVID has made it so much worse. Women dropping out of the workforce at roughly the same rates as men, but now what's happening is men are returning to the workforce and women are not. In Minnesota, it's an 11% decline in women's participation in the workforce. And one of the there's two basic issues that women face. One is lack of access to affordable childcare, and the other is lack of access to paid family leave. And this is happening in the United States in different ways than it's happening in Europe, as I understand it. So As part of the American Rescue Plan, as you well know, I worked with Senator Warren and others to make a significant investment in shoring up our childcare system.
Yes.
And, Secretary Yellen, I was wondering if you could just talk a bit about this. How does this ability of women to participate in the workforce connect to our economic competitiveness, and what role does childcare play in making sure that women can participate in the workforce and support their families?
Well, I think that women have contributed enormously in the United States and in countries around the world. Their labor force participation has boosted growth and has boosted household incomes. And we saw a surge in women's labor force participation in the 1970s and 80s, but it's leveled off and it's even declined somewhat. And there are a number of reasons for it, but when you look at the fact that in many European countries and other developed countries, labor force participation of women is now higher than it is in the United States, what stands out is paid leave and affordable child care as two things that distinguish the United States from those countries. They're really critical to enabling women to successfully participate. And I think it's exciting that the American Rescue Plan really addresses these issues, providing additional, very meaningful support on both fronts.
Yeah, thank you. I think what we do in the American Rescue Plan, not only with providing, with shoring up our childcare system, but also the child tax credit, which is going to have the impact of lifting, reducing child poverty by half, shows us the policy levers that we have to make our economy work for women. And ultimately that contributes to our economic competitiveness, as you say.
Yes, and it also helps children, I think, in the long run succeed to have that additional support.
Absolutely. It addresses that opportunity gap, as I like to talk about it, rather than an achievement gap, because it's really a lack of access to opportunity that our children have if they are living in poverty. This brings me to another thing, Secretary Yellen, I want to talk with you about. It's something that you and I have also talked about. Data shows us that people experiencing homelessness have been disproportionately impacted by COVID. And you and I have spoken about what we can do to get the recovery checks, the stimulus checks to people who are experiencing homelessness, and there's particular challenges getting the checks to them. Yes. Recently, your staff provided my office with a briefing on what Treasury is doing to connect with local shelters and providers and continuums of care to get checks to people. And I was really heartened by hearing what you are doing. And I want to make sure that these community-based efforts continue. So we just have a couple seconds, but I was wondering if you could just maybe just talk about that for a minute. And then if you could commit to providing some sort of guidance or publishing best practices, because I think there's some great examples of what works around the country.
Great. I mean, I think publishing best practices, trying to figure out what they are, is a very important role that Treasury can play in this and in other programs that we're charged with implementing. One of the most difficult issues is getting impact payments, and it will also apply to the child tax credit, getting these payments to homeless individuals. And as you say, we are working very, very hard, and happy to work with you to try to do everything we can on that front. We're working with IRS on this as well.
Thank you. Thank you, Mr. Chair.
Thank you, Senator Smith. Senator Moran from Kansas is recognized for 5 minutes.
Mr. Chairman, thank you very much. Chairman Powell, thank you for joining us. Secretary Yellen, pleasure to be with you again. Look forward to being in the circumstance in which it can be different than virtual. Thank you both for your public service. My question will be directed to you, Madam Secretary. The American Rescue Plan included $350 billion for state and local fiscal recovery fund. to be used for emergency funding to distribute to states, counties, local units of government. I know that the department is currently developing guidance in this regard. I'd be interested in knowing the time of that guidance, but I want to highlight for you a circumstance that Kansans and many other states, particularly in the middle of the country, are experiencing. No relief can be for COVID can be taken without looking at its broader consequences. And I'll take us back to what the chairman was talking about winter. A few weeks ago, we had this tremendous cold snap that invaded the country, north to south, from Canada to Texas. And that cold snap created huge increases in utility bills for consumers and even for businesses. It's estimated in Kansas someplace nearly $100 million in utility increases because of 3 days of temperature below zero and the cost of natural gas. In other words, the purchase price that utility companies were encountering to purchase enough gas to keep homes warm, to keep businesses operating was so high that the utility bills now reflect that $100 million increase that was experienced over just a few days. A few examples for you, Madam Secretary. There's a Kansas municipality. Some of our communities generate their own electricity and then sell it to their citizens. But one of those cities in Kansas with a population of less than 300 people had a February gas bill 3/5 of the total amount of their annual city budget. Another city, just over 1,000 people with household incomes less than $30,000, had a February energy bill over $9 million. A school which typically has a $10,000 a month gas bill in the month of February, it was $400,000. A small greenhouse in rural Kansas received a gas bill of just under $100,000, of course, crippling that business with an unexpected expense. And my question to you is, I would love to have a commitment that you would work with me and others. I think there's other senators on the banking committee and certainly other senators who have experienced the same circumstance. And I would like to see our state and city, our local units of government have the flexibility under the belief that you cannot take the financial condition of COVID in just a vacuum. All the things that pile on when a business is already so fragile, or when utility bills, individuals and families are already struggling to pay their utility bills, we can't take that just in isolation. And Secretary Yellen, I would just ask two things. Want to make sure you're aware of the circumstance, tremendous damage to small businesses and consumers in Kansas and elsewhere. Ask if you also would see that flexibility makes sense to you, on a commitment that you'd work with me to make sure that we can convince you and that you have an understanding of the circumstance, and then an idea of the time frame in which that the guidance might be in place so that relief could be used.
Well, Senator, first of all, let me say I appreciate your describing to me the problems that your state and others face because of the cold weather and the impact on utilities. Second, I promise that we'll work with you, and our staff can be in contact with yours to discuss the needs that your state has to deal with this problem. There is a good deal of flexibility within the law on how the funds can be used. Over the next 60 days, the statute provides 60 days for payments to get out, and we need within those 60 days to clarify what the funds can be used for and can't be used for, and glad to confer with you about whether or not this is within the realm of what the statute has in mind. So why don't we have our staffs talk offline about this?
Secretary, thank you for your answer. And you and I make a great team. We ended this in just Sherrod Brown's 5 minutes exactly. Thank you for that today and your response. I appreciate your willingness to cooperate and your understanding of the tremendous challenge and burden that individuals are having at home.
Thank you. Thank you,
Right.
Mr. Chairman.
Thank you, Senator Moran. Senator Daines, have you voted already?
I have, yes.
Okay, well, I'm going to call on you, then I'm going to go vote. And
Okay.
And I apologize to the chair and to the secretary. We're going to take this up because there are 2 or 3 more people that want to. So I'm going to go vote, call on you, then we'll recess after your question until about 12:30.
Okay.
So if Secretary Yellen and Chair Powell could stay a little bit longer. So Senator Daines will go for 5 minutes now. We will just recess after your 5 minutes, and then we'll come back about 12:30 for 2 or 3 other senators. Thank you all.
Thanks, Mr. Chairman. Appreciate that. Well, let me start off by saying I want to express my utter shock at the provision that was buried within the recent $1.9 trillion package that prohibits states from directly or indirectly cutting taxes. This provision was snuck into the bill at the very end of a more than 24-hour period of continuous voting. Process aside, this astonishing level of meddling by Congress in state fiscal affairs should be troubling to anyone, a Republican, Democrat, Independent, who believes fundamentally in the concept of federalism. This is why I was very pleased to see your response last night to the letter from 21 attorney generals who expressed concern about this provision, including my own Attorney General in Montana, General Knudsen, confirming that states can in fact still cut their taxes. And to quote from your response, nothing in the act prevents states from enacting a broad variety of tax cuts. That is, the act does not deny states the ability to cut taxes in any manner whatsoever. It simply provides that funding received under the act may not be used to offset a reduction in net tax revenue resulting from certain changes in state law, end quote. I know that Senator Crapo mentioned earlier in this hearing a specific hypothetical scenario involving unemployment insurance trust funds, and you stated the Treasury is still working through some of these issues, and you have 60 days to issue guidance.
That's
right. Great. Thank you.
That's exactly right.
Great. Well, let me just to clarify too, our legislature in Montana, it meets every 2 years. They're meeting right now, and they're slated to adjourn on or about May 1st. Sometimes it bleeds over a couple of days into May. So they really need this guidance as quickly as possible, as they're kind of now in the final throes of this biennial session. Secretary Yellen, would you commit to issuing guidance well in advance of the 60-day statutory deadline?
I can't commit to that. There are a host of complex questions that have to be resolved, and we need to confer with state and local governments, with members of Congress, and work out thorny legal issues around this. We're working as rapidly as we possibly can to get this guidance out, but I don't want to make a commitment that we can get it out a lot sooner than that. We will get it out just as soon as we possibly can. We want this money to be in the hands of state and local governments, but we'll just do the best we can.
Thank you, Secretary Yellen. Yeah, I appreciate it. Just with what's at stake right now with legislators that are meeting on more of a periodic basis. Shifting over here to Chairman Powell, some have proposed that the Federal Reserve change its operating model to include holding retail and commercial deposits through Fed accounts open on their behalf by banks with over $10 billion in deposits. Where adequate coverage through banks is not achieved, post offices would open accounts for retail and commercial customers with the deposits held at the Fed. These accounts would be offered at no cost to consumer and retail customers. My question, Chairman Powell, is the Federal Reserve equipped to service individual retail and commercial accounts?
No, and of course we're not permitted under current law, and that's never been our role, and it's really not been the role of other major central banks. It would be a quite dramatic change in our role in the economy, and one that I think should require very careful thought.
Thank you for that thoughtful answer, Chairman Powell. In 2019, the Fed, the OCC, and FDIC took steps mandated by Congress to tailor banks' prudential regulation. We were a year into the COVID-19 crisis, and banks and other lending institutions have been a critical source of relief, have maintained strong capital and liquidity reserves. I think it's crucial we continue to recognize that a bank's size and business model are very relevant to consider when looking at how much risk it poses. My question, Chairman Powell, is do you agree that the tailoring of regulations, including capital and liquidity requirements, to the systemic footprint of a particular banking institution is still appropriate, and that there has not been any demonstrated negative impact to the U.S. economy because of tailoring?
Yes, I would agree with that.
Okay, thank you. I'm out of time. I appreciate the answers of both Secretary Yellen and Chairman Powell. Appreciate it. And I guess, do I need to recess the committee?
Yes, so we are going to be in recess until about 12:30. If Secretary Yellen and Chairman Powell can please remain on the call, feel free to mute yourself and turn off your video until we're ready to come back, or however you feel comfortable.
Okay, so we're in recess until 12:30. Thank you.
Just to be clear, you need us to keep sitting here until 12:30, or can we come back at 12:30 or 12:25?
You can come back.
All right, just making sure.